joining us this morning with some analysis. Jim McCafferty, Asia Research Product Manager at Royal Bank of Scotland, joining us. Good to see you on this Money So Early, Jim. Yeah, so where are we heading here in the markets, considering what a strong Q1 we just came off of?
Well, we come off a very strong Q1. I mean, the China market's up 9%, Asia market's up 11-12%, Japan up 19%. But actually, if you look at the data coming out, last week, for example, in Chinese equities, we had 24 of our companies report earnings, and of those, 18 were actually earnings downgrades. So I think this month is going to be about, is the real economy actually going ahead?
Right.
And I guess we've got inflation data, 9th of April, we've got GDP numbers, 13th of April. That's what the market's going to be focused on.
And non-farm payrolls from the U.S. as well. Is the U.S. recovery for real?
Well, I guess so, and I think for China especially, this reliance on net exports historically is moving away towards domestic consumption. So what we're really looking for is seeing if the Chinese domestic consumer plus fixed asset investment is actually going to be as strong as we hope it's going to be.
Now, how did you read the PMI figures over the weekend? Do you look at the official ones, or do you look at the flash PMI ones from HSBC?
I think that was this weekend. We're really thinking about this week and the following week, and I think the real concentration is going to be on GDP data. And one of the things we're really looking at as well is fixed asset investment in China.
Right. So you don't care about the PMI figures, is that what you're saying?
No, I think what we're thinking about is how much money is going to go into China, because it's been a credit-constrained economy for the last quarter, and to a certain extent a credit-constrained equity market. And if we can find some monetary policy easing plus some big infrastructure investment, that could see the equity market go stronger.
Okay, so you're looking at for the fixed asset investment number. I mean, what would be a good number to you?
Well, the absolute number I think was 1.2 trillion RMB over the quarter. How much of that is dedicated towards things like railways, roadways, also airports? That's going to be the key for the second quarter. Okay,
that's going to be the key for the second quarter. And growth, what is RBS's call? Because right now we have kind of a division amongst economists about where China's growing. Is it 6% in the first quarter? Is it 8%?
I think our Q1 estimate is 8 point something. I can't quite remember the number, 8.2, 8.6. But I guess looking to Q2, and going back to the point I'm trying to make, is that I think fixed asset investment is something which the market will be relieved to see, because that can actually stimulate domestic consumption.
Right, so you're not really worried about China, are you?
No,
sounds like you're not.
We don't have too many concerns about China. In fact, for the MSCI China, we're looking at a return this year of more than 30%. So we think that the 5-year plan, which was instituted last year, is a very cohesive plan, and if it is implemented properly, which it has been historically, then that will yield good returns for equity investors. Right,
because you know, some would say over the last month or two, we have China shares here in Hong Kong, Shanghai being really the underperformer, considering, you know, basically you're seeing markets elsewhere around the world going gangbusters in Q1. So are you saying that we should still buy into these shares?
Well, I think what we're saying is that historically China has had periods of economic weakness, and when there's been economic weakness, what the authorities have done is have put in big infrastructure spends in places like northeast China, places like central China, putting investment into ports, into river navigation, and that's actually stimulated domestic economic activity, and we see this happening again.
So what should I be buying in if I want to buy into China?
Well, I think we should be looking at the cement stocks, for example, looking at some of the railway stocks, some of the airport stocks. In the cement stocks, names like Anhui Conch, for example, those are the sort of stocks we'd look for.
Just cement, anything else, materials?
Cement, materials, I guess some of the mining stocks, for example, some of the Mongolian miners, they will all be beneficiaries of this big infrastructure spend.
All right, Jim, thanks for joining us so early. Jim McCafferty there of RBS joining us this morning.